Hi everyone, hope you're all doing well, and today we're going to talk about the Deliveroo IPO that is coming to the stock market in the next few days. It's a video that's been requested quite a bit for me to give my opinion on the Deliveroo IPO. It's definitely one that's getting hyped up at the moment, and yeah, we'll talk about some of the positives of this one, we'll talk about some of the negatives, and at the end of the video I'll say if I am going to buy this IPO at the IPO date or maybe later on, and everything like that. So if you could smash the like button, if you're new, make sure to subscribe. If you do want to buy the IPO, there's a link to a Freedom24 account. You have to open that up pretty soon if you do want to participate in it. But basically that'll get you in the IPO before the actual IPO happens, rather than rely on say something like a trading 212 that probably will put the stock on too late when the stock has probably gone up. So that's there if you do want to get involved with this IPO. But we'll take a look at Deliveroo IPO and what's going on with this company. This is a UK IPO. We don't get many of these. In fact, I think it might be the first one that I've ever covered on the channel. And it's one of the biggest UK IPOs for a very long time. So the IPO is supposed to happen on the 31st of March. It's going to go under the ticker symbol ROO. The market cap's going to be about 8 billion, which puts it at an okay valuation. It's not too bad, and it's not too high, somewhere in the middle, so not too bad a valuation on this one, and it should be about £3.90 to £4.60 a share. So Deliveroo, or its incorporated name, which is ROO Foods Limited, is an online food delivery company. I'm sure most of you guys have heard about this company and use it. I always like to talk about companies that I use, and I definitely use Deliveroo quite often, as well as Uber Eats and also Just Eat, which we'll be talking about exactly that one thing right there in a bit of the negative section, funny enough. But yeah, it was founded in 2013 by William Shue, which is a founder-led company, and I've actually previously watched interviews with this guy before I even knew that Deliveroo was coming public. I think I've watched a few things on like how they meet the demand, and some of the ghost kitchen that they've started operating, which is basically kitchens which basically only exist to deliver like online delivery orders and have like no restaurant side. And yeah, I think it's when you listen to his story and like how he's still so involved in the company and how he sometimes still does some of the deliveries, I think it's a really impressive story. So it's always good, I think, to have a founder-led company. And I think when you look at what Deliveroo's done in that short time, only 2013, it is pretty impressive as well. Basically, it operates in a lot of locations in the UK, and that's where it was first based, and now it's expanded to a lot more countries in Europe and even worldwide. So it does have a good worldwide presence at the moment. Now, first of all, when we get into the food delivery side of it, and as well as doing food delivery side of it, they do also now do like grocery delivery as well. But the first thing is like the market. How is the market going at the moment? Well, at the moment, the market share is, at the moment, the company, the industry that it's in, the food delivery side of it, is a massive growing market and will continue to grow in the next few years. And sure, in the short term, it's had a bit of a boom because of the CV situation and a lot of restaurants being closed, and obviously online being one of the only major ways to deliver a lot of these restaurant meals. But it's still, previously, the market has been growing huge, and going forward, sure, some of the growth might have been pulled forward a little bit, but 2, 3, 4, 5 years down the line, the online delivery food side of it will be growing huge. So we are talking about a company that is in a growing market, which is positive. And the thing as well about this company is the market share is growing at a really good rate. So a few years ago, it did seem like Just Eat might have finally tied down the market share for this industry, but Deliveroo has come back with some really good market share. So it is still growing as well and being very competitive, because it is a very competitive industry. And when I show you some of the revenue here, you can see the revenue, even without the CV situation, the revenue is still growing fantastic on this company. 2018, 479 million, 2019, 771 million, and there in 2020 getting to over 1 billion in revenue. So you can see the growth is pretty good, and funny enough, like the CV situation hasn't spiked up the growth. That's generally the growth that it's been growing at the last few years. So we have got a very beast of a revenue company here on the UK stock market, which we don't normally have, which is really attractive. And as well as having a company that's involved in a growing market and also having really good revenue growth, it is also an Amazon-backed company. So when you think about the companies that you could have backing it, I think Amazon probably be, on top of your list to be backing you, and that's what it is. Amazon do have a stake in this company, which is a really good sign. So everything from that point of view does seem like this company is really good. A lot of positives here, but like I say, we've only covered the positives now, so we will go to some of the negatives. Now, some of the negatives is the number one, which is the CV. So this actually hasn't benefited Deliveroo too much in the early stages because restaurants were shut for even delivery side of it. But later on now, we are seeing some of the benefit as more and more restaurants are back open and using Deliveroo to help their sales. So I think that has helped the sales slightly in the back end of 2020. But what I think people have to consider is, I think in the long term, the market industry that Deliveroo is in, this delivery on the food delivery service will carry on growing, when you look, 3, 4, 5 years down the line. But I think in the short term, the next 12 months, I think that the growth side of it might slow down a little bit as people have the ability to go back to restaurants in the next coming 12 months. And I think a lot of numbers are being brought forward in this company, and I think in the next 12 months this might actually sting the company as more and more people slowly go back to restaurants. So I think the numbers or the growth side of it might slow down a little bit in the next few months, which is something I'd keep an eye out for this company. The next thing is the losing money. It has never been profitable, and when you look at the amount of money they are losing, it is 2018 257 million, 2019 390 million, and 2020 220 million. And you look at the cost of sales, they are very high cost of sales, and basically Deliveroo are nearly losing money on every order that is placed through them. So you could say that in the last 12 months they have moved in the right direction and they aren't losing as much money as what they were doing, which I guess you could say is a positive, but they're still only back where they were 2 years ago. And when you look at the amount of money they are losing, it's a lot of money. They are losing a lot of money through the revenue side of it. And I can only see at the moment, they're losing a lot of money, but I can only see that getting worse, really. And I still see, and even management have been open about this, they're focused on revenue growth. But I think even if they wanted to, they couldn't be profitable. And I still, when I get into a few more things, when I start talking about the competition side of it, I can only see them losing more money from, even years down the line. And at some point, as me as an investor, I like to invest into companies that are profitable or going to be profitable with a path to profitability in the coming 2 years at the maximum side of it. And for these guys, I cannot see them being profitable in the next 2 years, and that is one big red flag that I have about this company. So tying in with that last negative, which is the amount of money they're losing, is a lot of that is to the competition side of it as well. There's not a huge markup you can make in the delivery side of it, but the other thing is also the competition means that your margins are always going to be really tight, because when you look at the industry that Deliveroo are in, and the point I made earlier is that, I don't think there's that much loyalty. Like, I'll easily order, this is why I like investing in industries that I know, because I kind of know these things, and I'm sure you guys, know these things. Personally, from my opinion, I've got no really big loyalty to if I'm going to order off Uber Eats, if I'm going to order off Just Eat, if I'm going to order off Deliveroo. I don't really have that much loyalty, and because of that, as well as it not being a great way, a company that has tight margins already, when it's this competitive as well, and you're trying to take more and more market share as well, the amount of money that you have to put in to do that is absolutely huge. Deliveroo are putting more and more money into advertising, and that's probably only going to ramp up. They're putting more promotional out there, like, sign up a friend and you get £10 off your next order and stuff like that. And that's what I mean, the competition's so fierce here, and they can't really, put the prices up, because otherwise the competition wins. It's just a battle of right, who's actually going to lose this battle. And when, if either Uber Eats were the ones to step out of this industry, or Just Eat were the ones to step out of this industry, we're not going to see probably a profitable company until one of the competition in this area, which is really fierce, packs it in and moves out. And it looked like a few years ago Just Eat were going to win, and it were going to be the other guys that backed out. And now it's getting Deliveroo have had a good year, and it's once again it's back open. But I think like this competition will go on for a very long time, and while it goes on, unfortunately, the profitability side of it won't exist, because it's just going to be very fierce trying to get market share and keep retaining them customers. And that's one of the big things. And one of the big things they're trying to do is basically get McDonald's on exclusive deals. So they only go on I think it's Just Eat that has the McDonald's deal, and Greg's, and people only use that app because it has two of the biggest UK restaurant or food services out there, and people going on there just because they're on there. And you've seen also Deliveroo trying to get brand deals that are just on there as well. And because of this fierce competition, I can only see more and more advertising expenses and promotional expenses, and also them not being able to make more money because they have to keep fees low to keep people on the platform. And I think that combination of how much they're losing, I can only see carrying on while this fierce battle's going on between Deliveroo, between Uber Eats, and also Just Eat. And I think realistically, there's not too much in my opinion, I don't think there's that much brand loyalty in this area. So yeah, I think that's one of the massive problems that I have with this industry. And one of my last little negatives, and like I said, this one probably, it isn't a major problem. Like the last two problems were major, but this is one thing that I would consider, is this industry is starting to heat up in a lot of like legal battles that are going on. So we've seen Uber Eats, or Uber in general, should I say, rather than just Uber Eats, Uber having a lot of like fierce battles about the people that work for them and how they're treated and the pay and if they're contracted or everything like that. There's a lot of things going on with this sort of industry, and Uber have just started that up. And I think the same thing with Deliveroo, because of it, the freelance industry that it's in, wages, because it's not really a minimum wage thing. You kind of get based, you get paid on what you deliver and things like that. And yeah, I just feel like there's always going to be a lot of pressure, like with laws in certain countries on companies like this. And don't get me wrong, you're always going to have this sort of thing with whatever company you're in, some more than others. And that's that's one of the things we've been investing in some companies. But I feel like these guys could have a lot of legal issues because of how the business model works, just like what Uber have done over the last 12 months. And I think that might also affect the share price. And I've already got Boohoo at the moment, and you guys know like how much Boohoo gets a lot of this grief. And I think Deliveroo would be one of the very similar to Boohoo. And yeah, like I said, I wouldn't take it as a massive negative, but it's just something that I would consider as well that might happen in the background. So overall, my opinion on Deliveroo is that there is some positives. It's a growing industry, and you look at how the company's performed over the last few years on the revenue side of it, really amazing revenue growth. But at the moment, I just can't buy into Deliveroo just because of how competitive this industry is. And I just feel like there's not that much loyalty in this industry. And I feel like because of that and the aggressive advertising and the promotion that they'll have to do, is I can't see this company making money for many years to come. And because of that reason is why I'm not personally invested in this one. But I feel like if there was a winner in this industry, and you selected that winner, so if it was Deliveroo and you invested, and a few years down the line Deliveroo did dominate this industry and the one stepped out, you would definitely benefit from it in the long term. Personally, for me, there's just too many different scenarios that could happen that for me, I'd rather just go put my money somewhere else and also be able to sleep at night. So yeah, for me, I'm not going to be investing into the Deliveroo IPO. And probably further down the line, if the stock was to dip, I probably won't pick this one up right now as the company stands. But there is some good things going on with this company, but for me, it just doesn't fit my investment style. So hope you enjoyed this video anyway. For you guys that did want a video on the Deliveroo IPO, if you could, smash the like button. If you're new, subscribe, and hopefully I'll see you on the next video.